flagship Nigeria Petroleum Industry Act was meant to be the omnibus act that would reposition Nigeria's oil industry on a more solid platform. It was to enable the national oil company to take off on a more profitable trajectory. It turned out that while nomenclature and roles of players changed a bit, the old games and tricks apparently still prospered. The new Group Managing Director NNPCL, Bode, recently exclaimed rather naively that the political resistance and interests holding progress of NNPCL to ransom remain daunting, attesting that the familiar network or cabal are still very much intact, and the PIA, we are not surprised, now needs another review or at least some amendment. Hello, this is Bode, Ososami, Global Business Insights, where we probe in more depth into the main headlines and share perspectives on some of the related issues. As far back as over a decade ago, most experts were of the view that privatization of government interests in NNPCL, not just an incorporatization or commercialization, was the only antidote to rescue the Nigerian National Oil Company from toxic grips of government. The call to privatize has never been about just the vagaries of different governments in power, but more about having a more sustainable trajectory that gives NNPCL a chance to leverage private capital, talent, and resources to do well in a much more competitive terrain than we used to have a decade ago. Many cite Saudi Aramco and the Chinese oil company, for example, as examples of national oil companies doing well, forgetting that the extremely different context of an Islamic monarchy and absence of Western-style democracy in China disallows oversight comparisons. To the recent amendments of the PIA, we gather the Attorney General has notified several of the federal agencies of the President's approval of the proposed amendment titled the Petroleum Industry Amendment Act 2025. The amendment was said to have been originated by the Minister of Finance with the stated goal of addressing the escalating fiscal leakage and revenue loss confronting the Federation. Let's consider the two major aspects of the amendment which are not minor tweaks at all. First, the Upstream Regulatory Commission NUPRC will act as the government representative in all model contracts attached to licenses and leases. The NUPRC will also replace the Nigeria National Petroleum Company Limited as the concessionaire in all subsisting production sharing contracts, profit sharing contracts, and risk service contracts. In this role, it will be responsible for evaluating and approving all relevant work programs and verifying and approving all contractor costs to determine cost recoverable expenditure under these contracts. These roles are very key aspects of operating granted leases, thus making the regulator both the referee and the player on a complex football playing field. In addition, weaker segregation of roles will enable and invite in the highly lucrative contracting and cost management processes some measure of corruption as power significantly shifts to the upstream regulator, who it seems may have pushed for this transfer of roles and who is more likely to be eventually tainted or at best distracted from its pure regulatory roles. Second, the amendment ousts the Ministry of Petroleum Incorporated MOPI as a co-equal shareholder of NNPCL with the Ministry of Finance Incorporated MOFI. Ownership of all shares in NNPCL shall be vested in the Federation at incorporation and held by the Ministry of Finance Incorporated as the sole agent of the Federation. You could end up having a weakened NNPCL board and opening the door to excessive political influence. It suggests the board will primarily serve as a mere executor of MOFI's directives and no more the highest strategic and planning organ. If an IPO is initiated, for example, will MOFI continue to exert influence even with diluted ownership? Investors may also be interpreting the amendments from the perspective of attractiveness to invest in a potential initial IPO. And if you have a simpler ownership structure under a single agent, that's under the Ministry of Finance Incorporated, for example, it may be better. That is if the intention is to fast track the IPO. Also, NNPC not having the concessionaire role does raise some issues. The concessionaire is a technical advisory role on behalf of the federal government, given its stake in joint ventures and other partnerships. Taking this role from NNPCL does allow NNPCL to focus on its own direct business endeavors and presents a simpler business model for investors. And it's possible that the new directors and GMD in NNPC may actually prefer this headache of managing these other side issues as suboptimal, given that it already has quite a bit on its plate to get refineries working and the other things NNPCL is still struggling with. So who handles the concessionaire role becomes the question, given it is a technical role typically handled by an operator or an organization with deep technical experience. So who does it? It can still be outsourced to a new unit set up to deliver highest quality of standards based on far more efficient work processes. Many have said the Ministry of Petroleum is not set up for this. Obviously, the Ministry of Finance does not want the technical and ethical headache, or they would have taken it. But moving this role to regulators is also not ideal, as it dilutes their role and comes with many conflicts to manage. You can, of course, aim to kill two birds or several birds with a stone by accelerating the sell down of the federal government's stake in all the ventures in the Nigerian oil industry, making the role of concessionaire far more limited, even non-existent. The exit of the FG from joint ventures and privatization of NNPCL will also raise funds to reduce debt obligations and fund vital development and infrastructure expenditure and social welfare programs. Privatization will allow a more professionally managed NNPCL to emerge and thrive, no more encumbered by the Aso Rock revolving door and the many whims of changing politicians, some still waiting in the future. It is time to announce a clear privatization initial public offering calendar instead of wasting everyone's time with an amendment that has not been properly conceived. To other business stories, it will be all pomp and pageantry, done only as the Brits know how to do best, as Trump kicks off a second state visit to the UK. This time, Britain will want to milk more of the so-called special relationship, which already has helped to get lowest tariffs, and there could be more special concessions. Yesterday, to kick things off, on the right note, Alphabet announced plans to invest £5 billion in artificial intelligence development in the UK. Microsoft also announced plans to invest $30 billion in the UK by 2028 as the company builds out its artificial intelligence infrastructure. Most of the tougher negotiations would have been done. This now is just going to be about the Brits pulling out all the stops, plenty of bells and whistles, all mostly ceremonial, with super heavy security and protests that Trump will not see except on TV, well-rehearsed choreography and rolling out of red carpets, plus the glitter of tiaras and the best in evening wear at a banquet in Windsor Castle. But anything can happen with Trump. Industrial production in the United States was up by 0.1% on a monthly basis in August. This was after the 0.4% contraction recorded in July, and also better than the market expectation for a decrease of 0.1%. Other details of the report by the Federal Reserve showed that manufacturing output also rose 0.2% in this period amid a rebound in the output of motor vehicles and some non-durable goods. Also in the US, retail sales increased by 0.6% on a monthly basis in August to $732 billion. This print followed the 0.6% increase, revised from 0.5%, recorded in July and came in better than the market expectation of 0.2%. On a yearly basis, retail sales were up 5%. Gold further extended its rally yesterday, reaching a new record high above $3,700. Japan's Nikkei 225 share index topped 45,000 for the first time when it opened yesterday. AI-related investments, as well as widely expected commencement of easing in America, contributed to the surge. Also, a lowering of tariffs on Japanese car exports to America from 27.5% to 15% took effect as from yesterday. The S&P 500 pulled back a bit as traders awaited today's big Fed rate decision. The market capitalization of Alphabet, the parent company of Google, reached $3 trillion, joining Apple, Microsoft, and Nvidia, all big tech names buoyed by demand for artificial intelligence. Only 4 companies are now worth over $3 trillion in the US. Earlier this month, Alphabet's shares soared after it won a major court case threatening to dismantle Google in an antitrust suit. Trump said yesterday that the US and China have a deal that would keep TikTok operating in the United States, transferring its US assets to US owners from China's ByteDance. Oracle is reported to be participating in the deal that allows the Chinese-owned TikTok to continue US operations. The Indonesian government has allowed a nickel mining company to resume operations in an eastern archipelago despite an outcry over damage it could cause to pristine islands. The cluster of islands and shoals in southwest Papua province sits in the Coral Triangle and is thought to be one of the world's most pristine reefs, with its clear blue waters making it a popular diving spot. Environmental Minister Hanif Faisal Nurofik said Gag Nickel, a subsidiary of state mining company Aneka Tambang, has complied with required standards. Environmental activists strongly disagree. U.S. Treasury Secretary Scott Bessent has said Trump's suggestion of companies reporting on a semi-annual basis would be good news for investors, adding that it would mean executives are less fixated on short-term metrics. A federal appeals court says U.S. Fed Governor Lisa Cook can remain in place for the Federal Reserve's meeting, which ends later today. The court judge rejected the Trump administration's attempt to fire the central bank governor for alleged mortgage fraud as an appeal moves to the Supreme Court. Later today, the Fed is expected to cut interest rates at the ongoing FOMC meeting. Meanwhile, a Trump appointee, Stephen Miran, was sworn in quickly to join the board of governors to fill a vacant seat ahead of the policy meeting. Citigroup analysts expect growth stocks to benefit the most from rate cuts, which could take rates down by 1.5% over the next year. We also just got UK August inflation steady at 3.8% as expected. Core inflation, which excludes more volatile energy, food, alcohol, and tobacco prices, rose by an annual 3.6%, down from 3.8% in the 12 months to July. The sticky CPI print is unlikely to move the needle for Bank of England Monetary Policy Committee when they meet later in the week. Asia-Pacific markets were mixed as investors brace for the outcome of the US Fed's FOMC two-day meeting, where they expect interest rates to be cut by 25 basis points. Well, that's all we can take on this episode of Global Business Insights. Thank you so very much for watching, and don't forget to subscribe and share. Bye for now.